Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. Meanwhile, the Forex Geek channel is your go-to source for all things Forex trading. Alright, so if you're not yet subscribed to this channel, then I can tell you that you are missing out on a lot. In this particular video, we are going to be diving into one of the most powerful tools in a trader's arsenal, and that is none other than the Fibonacci expansion levels. All right, so whether you are just starting out or looking to refine your technical analysis skills, this video is for you. So stick around, and by the end of this video, you will understand exactly how to use Fibonacci expansion levels to identify potential price targets and elevate your trading strategies. So first, let us talk about what Fibonacci expansion levels are. Okay, if you want to make use of the Fibonacci extension on the MetaTrader terminal, you have to go to Insert, you go to Fibonacci, and you click on Expansion. All right, so this is what we call Fibonacci expansion. Okay, these are Fibonacci expansion levels. All right, now simply put, these levels are a set of price levels that help traders predict where the market might move beyond a key support or resistance zone. All right, now unlike Fibonacci retracements, which focus on pullbacks during a trend, expansion levels project future price movements as the trend continues. All right, so if you are familiar with the Fibonacci retracement, let me even put the Fibonacci retracement on the chart. If you are familiar with Fibonacci retracement, you will know that what it does is to predict pullbacks. All right, so you can see that in this bullish trend, as we can see, this is a bullish trend, right? In this bullish trend, the Fibonacci retracement levels are predicting pullbacks, right? They are predicting potential reversal points, potential points where the pullback will stop or will end in this bullish trend. But the Fibonacci expansion tool predicts potential price targets, predicts potential levels where the price will get to if the trend continues. All right, so both the Fibonacci retracement and the Fibonacci expansion tools are important. Okay, so here is how it works. Fibonacci levels are based on ratios derived from the Fibonacci sequence. It's a mathematical series where each number is the sum of the two preceding ones. So in trading, we use specific ratios like 61.8%, 100%, and 161.8% to calculate possible price targets. All right. Now, these levels are applied to the market after identifying a clear trend and its key points. Okay, like the start of the move and the peak, and also the retracement low. All right, so once you have identified these points, right, you can plot the Fibonacci expansion tool on your chart. This will display horizontal lines representing the expansion levels, as we can see here. All right, the 100% level often represents an equal move compared to the initial trend. Okay, so as you can see, this was the initial low, right? And then this was the first high, right? So if you want to draw the Fibonacci expansion, you have to draw it from the low to the high. As you can see, that was how I do this expansion, right? So you draw it from the low to the high, and then you can see that the Fibonacci tool predicted the possible price targets after the pullback. right after the pullback. So right after this pullback occurred, we can see that the price, if we had made use of the Fibonacci expansion tool, the price got to even the 61.8% level, as we can see. The 161.8%. Initially, it got to the 61.8%, and then it rallied further to the 100%, and then it rallied further to 161.8%. So had it been we had made use of this tool and we entered the buy trade right after the pullback, an ideal place to set our stop loss would have been just below the previous swing low, all right? And then for our take profit levels, we can use either of these expansion levels, okay? So if you had a good risk to reward ratio, let's say we entered here and we were risking about 120 pips, let's say we were risking about 120 pips, the first expansion level has already given us a risk to reward ratio of over 1 to 2, right? Because we're having a 250 pips, right? So we're risking about 120 to make 250 pips. That is over 1 to 2%. I mean, that's over 1 to 2 risk to reward ratio, right? So we would have considered exiting our trade here. Okay, we have talked about twin trading in a previous video. So if you want to use the twin trading strategy, in case if the price continues to go higher, right? In case of if the rally continues, if you want to make use of the twin trading strategy, then we could have considered entering two identical trades, and then our first target would have been at the 61.8% level, and then the second target could have been at the 100% level. So we would have benefited from both. We would have benefited from the continuation of the bullish move. All right, we could have even considered splitting our trades into three and set our targets at the three different Fibonacci expansion levels. Okay, so that if it ends up getting to one, and then once the first target has been met, we have to break even. All right, that's how to use the strategy, so you don't end up turning a winning trade into a losing trade. All right, so once the first target has been hit, the remaining two trades, the remaining two identical trades, you have to break even. All right, you have to shift your stop loss to the entry price or a little bit above the entry price for a buy, right? So in this case, if we had done that, then we would have, we would have made even more than 1 to 3%, perhaps more than 1 to 3%. We would have made more than times 3, if I'm not mistaken, more than times 3 of our risk, right? Because remember that the risk level for the 3 trades, that if you were going to make use of that strategy, right, the risk level for our 3 trades was the same. The stop loss level was the same, but the targets were different, right? The first target could have been here, second target here, and third target here. So at the end of the day, instead of just closing our trades at risk to reward 1 to 2, the first trade would close at 1 to 2, the second trade would have even a bigger reward, and the third trade would have a bigger reward than the second. Okay, so that's going to be a great strategy when you want to use the Fibonacci expansion. Okay, this is one of the strategies that you can use the Fibonacci expansion with. All right, but you can use it with any other strategy of your choice. Okay, so to maximize the effectiveness of Fibonacci expansion levels, consider these tips. Okay, always pair Fibonacci levels with other technical indicators. For example, you can decide to use the moving averages, you can decide to use RSI just for confirmation, okay, just to confirm your exit, right? And then use them in trending markets. Of course, the Fibonacci expansion works in trending market. You shouldn't be using this in a consolidating market, all right? You're gonna make some losses if you do that. And then avoid overloading your charts. Okay, stick to a few key levels to avoid analysis paralysis. Okay, also keep in mind that these levels are not guarantees. Okay, they are probabilities. Always combine them with solid risk management practices. If you are new to this, start by practicing on a demo account, familiarize yourself with identifying trends, plotting Fibonacci tools, and observing how price reacts around these levels. Okay, over time, you will get a better feel for how to incorporate them into your strategy. If you found this breakdown helpful, don't forget to give this video a thumbs up. It really helps the channel reach more traders like you. And if you're not already part of our community, hit that subscribe button now. We upload daily videos on Forex trading, covering everything from beginner basics to advanced strategies. Also, I'd love to hear from you. Drop a comment below and share how you've used Fibonacci tools in your trading. Or if you're just starting, let me know what topics you'd like me to cover next. And thanks for watching. And remember, in trading, preparation is key. Keep learning, stay disciplined, and I'll see you in the next video. Happy trading.